All right, testing one, two, three. Now you guys can hear me. There we go. All right. Jeez, always. I don't know what it is, but as you guys are seeing, continuing to have issues here with this streaming software. So definitely looking probably to do something different soon. Try a different provider, guys. I apologize for that. But hey, welcome. Chris Franks with Texas West Capital coming at you live a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 23rd of May, 2023. Glad to have you guys checking in here. Hopefully, y'all are doing all right. We got lots of stuff going on and yet a week of really nothing, right? So, we've got the is it some sort of ritual seeing it for the fourth time? Hopefully it's a good thing, whatever you're referring to exactly there. But man, oh man, yeah. So we've got the U.S. debt default thing, all over everybody, right? We've got Memorial Day weekend coming up here in the U.S., and then we've got the VIX, which is sitting at right around 17 or so, 17 and a half. And so we're going to talk about a few of those things, as well as some others as always, take a look at some charts. But how are you all feeling about things right now? Are you guys still concerned? Are you worried? I mean, we talk about the big thing now. There's always something, right? There's always some excuse. And so when we're talking about crypto, it seems like most people now have latched onto the liquidity thing, right? Lower liquidity and whatever. And so here's my thoughts on that, guys. All of a sudden everybody assumes lower liquidity means you have to go lower, which not sure why that's the default assumption. Here's what I would look at. What you learn is the people that are accumulating in accumulation areas are the big players, the big professionals. They're the ones who have the size. They're the ones that generally get the market moving, right? Now, they use retail, you, me, everybody else. They use us as liquidity to make price move, okay? But they don't force the market to do anything the market's not doing, right? So there's this often repeated, really wrong way of looking at it, where they say, okay, well, whales are going to dump on us and all this stuff, and it's just silliness, guys. I'm going to tell you right now, if that's the stuff you're thinking of, just understand it's only because you don't understand what's going on. Okay, so big players in a liquid market can't make things happen that they don't want it to happen, right? And so this idea, they're going to kind of dump on me, right? Doesn't make a whole lot of sense, because think about it. If they dump on you and force price down, then they're losing money. Okay? I mean, this is about as simple as I can make this for you guys. If I've got a lot of money, or I've got a lot of, let's say, Bitcoin, and I want to sell it, right? I want to sell it for the highest average price that I can get for it, right? So why would I just dump it and force the market lower? You're like, so you can buy it lower. Yeah, but I'm getting a lot less after all the work I put in already to buy. That doesn't make a whole lot of sense, right? That doesn't make a whole lot of sense. And so the way you need to think about this is we were through this accumulation since last June, right? And then we had the low, the November kind of terminal shakeout, the absolute low, right? We had that there in November, and then prices now rallied above, obviously, both those levels, right? So accumulation was done over 6+ months. Okay, it wasn't just from the November low. If anybody's telling you accumulation was the November low, guys, stop listening to them, because they don't know what they're talking about. All right, there is a certain structure to the way things happen. Now, so if I've been accumulating, if I'm a big player and I'm accumulating tens of millions, hundreds of millions, right, of dollars worth of whatever it is, right, in this case, Bitcoin, I'm not going to dump it. I've been accumulating, in the 15 to mid 20s kind of area. I'm not dumping it $5,000 higher. That doesn't make a whole lot of sense. Okay, and especially if you're saying, low liquidity in the market is good. No, I'm smart enough not to just dump it. I'm smart enough that I know that if I put a huge drop upon the market, it's going to send price shooting lower, and I'm not going to get any. What am I going to get? My average cost is up in the 20s. My average sell is now just right around that same area. What have I accomplished? Nothing. So you guys, you have to think beyond this. The best way to think about it, if you're really concerned about liquidity, is, well, in that case, the only people really that are probably going to sell are going to be retail because they're scared, because again, they're thinking the wrong way, right? And if they're selling, all they're doing is putting their asset into the hand longer term holders, right? So if you've been accumulating at the lows, right? If you're a big player, you've been accumulating at the lows, you're going to keep accumulating. If retail's giving you money or giving you asset, you're going to keep getting it, right? So, I mean, this is really just the simplest way to think about it. Logically, it doesn't make any sense. If your average buy is in the 20s and you're thinking all of a sudden, yeah, you're just going to dump on the market so your average sell can be just a few $1,000s higher. No, you're not going to spend 6, 8, 12 months accumulating whatever it is, right? You're not going to spend that accumulating just so you can make a couple of grand on the movement, right? And you're not making, in terms of percentage over your average buy-in, you're making a few percent. You're not going to do that. That isn't how it works, guys. Not at your highs and your lows, like your trend highs and lows. Okay. So I hope that kind of helps you think about it a bit better, because I don't think you should be running around thinking about it in the way that most people seem to be. It's the easiest way to think about it, and it seems to make sense when you first think about it, because you're scared, right? You're fearful that because you don't understand what's going on with markets and you don't understand how they operate, and so you think, oh my God, they could just dump it on me and that's it. But that isn't really how it works, guys. Your big players don't do that. They don't just, occasionally you'll get somebody in there who'll try it, and they may get a knee-jerk reaction a little bit lower, but then if the market is truly bullish, it's going to suck up all that supply and then just keep going higher. It may pull back a little bit as it does, but it's going to take all that supply and then just go higher. You're not going to make the market do what it's not prepared to do. Okay? If the market is bullish, you're not going to turn it bearish. You're not. If the market's bearish, you're not going to turn it bullish. So these big players, yes, they determine how price is moving, but they don't determine the points at which where the market reverses. All they do is they kind of gauge the market. They test it consistently. If you guys know anything about Wyckoff, it's all about testing the lows, the highs, the range, whatever, seeing where the market's at. And if the market's bullish, they just nudge it, right? They let the market do the work. They let your liquidity do the work to move price up. If it's bearish, they nudge the market down. They let your liquidity do the job of moving price down. Okay? Now, this is a very, very big oversimplification of what happens, but basically that's the deal. That's what's going on. So just understand that. If you're new and you don't understand, or guys, I'm going to tell you, there are people who have been trading for 20 years that have no real understanding of Wyckoff. It's not their thing. But I'm telling you right now, if you really want to understand what's going on, I think it's an amazing place to go. But you've got to I'm going to tell you what, guys, right now. Most people are not going to learn to be successful, competent, consistently profitable traders on their own. Period. It's just not going to happen, okay? Just like most people won't do anything will not get great at anything on their own, right? We always get coaches. If we want to learn to become better at some sport, we get coaches, right? If we want to learn to be better at an instrument, most of us, we have to get some sort of coach, right? Some sort of teacher, right? It's the same with everything, guys. I don't know. Everybody thinks that, trading is this a thing you can come in and do on your own, you just be fine. Most people can't. There are some that do. But I'm here to, again, guys, I'm not here to blow fluff up your rear end, right? To blow smoke up your rear end. I'm here to be truthful with you about trading. And the truth is, most people are out within the first 3 months, first 90 days, losing everything, and often more that they put in that time. Most people don't get to this greatness of trading that they think they want to be without help, without a mentor or a coach or somebody out there, some kind of instruction to help them kind of miss the pitfalls and stuff like that. Me personally, I've had many throughout my life. I'm going to tell you what right now, it helps immeasurably. You can't imagine the amount of money you save by having somebody help you with that. So just some thoughts on that. The other thing is, guys, again, something I talk about often, if you want to learn something, you have to be coachable, period. That teacher, that coach, that mentor cannot force you to do anything. It's up to you to do it. So the first step in that is to be open-minded, not be full of yourself, not think you know what you're doing, not whatever. Be humble and listen. The second part is then you actually have to do the things that they say you have to do. And you have to do them consistently. You have to be focused, you have to have discipline, and you have to do those things consistently. If you can't do that, guys, or if you choose not to do that, you're not going to get where you want to go as a trader. Now, many of you are probably sitting on the other side of the screen here going, yeah, whatever, man. I'll show you. Well, show me. That's fine. But I'm telling you realistically what it's like. And even if you can do it on your own, why would you waste all the extra time and money when you can pay a lot less and learn in a lot quicker time with somebody who knows what they're talking about? I've never understood that other than people just are stingy. They're like, yeah, I want to do this, but I don't want to spend any money to learn how to do it correctly, you know? And it's not just with trading, it's with anything, right? People do that. People half-ass their way through lives, and then they're all upset that life isn't doing what they want it to do. Again, guys, if you continue doing the same thing over and over again and getting the same result, but wanting something different, I mean, it doesn't make any sense, right? You have to change. You have to become uncomfortable. You have to do those things that you're not used to doing on a regular, consistent, daily basis in order to get where you want to go, okay? So, there you go. Hopefully, if you're new, this all resonates with you. This gets your attention. This gets you excited. This gets you thinking. Because that's what we're all about, okay? Sometimes, a lot of times people come in here and they're like, oh, just give me targets. Well, I don't just give targets, guys. My goal here is to help you get understanding, make you become a better trader as best as I can. So that way you can start doing these things on your own. You don't need to look for somebody to tell you where to enter and where to exit, right? Because one, what if they screw up? Two, what if they no longer do it anymore? What are you going to do? You can't do it on your own, right? So the goal is to be able to do it on your own. And I hope that makes sense there, guys, okay? For those of you that continue to come back, man, I love you guys. Great. By the way, guys, before we get going here, notice on the screen there's the scroller. We're still doing this for the moment. You can get our Elite Tier 3 membership for just $50 a month for your first 3 months, okay? You can cancel at any time from inside your membership portal. It's not like you have to. I hate that too, where somebody says, hey, listen, you can cancel, but you have to contact us so we can try to continue to sell you into it. No. You can right away, anytime you want. First month, second month, third month, fifth month, whatever you want, you can cancel right there in your membership portal. It will go to full price after the third month. So your fourth month, it will. But man, you can get 3 months for less than the price of 1 month right now, $50 a month, just renewable on that until you cancel, okay? That'll get you into Tier 3 right there. And that will get you Elliott Wave, Wyckoff, and price action education every week. And everything else we have with that. The other thing I've done is just the other day, I released a free trading strategy. You guys can find it. If you look right under the video, there's a link there that says get your free strategy. Click on that link, go there, do it, enjoy, have fun. My gift to you. It's an easy strategy, guys. And I put it out there because a lot of times people come in new and they don't know what they're doing. And this strategy actually helps you find a logical entry into the market and a logical exit out of the market. And so it's got rules. As long as you follow the rules and you do it, that's the first step. But with any strategy, guys, just know that the more you learn over time about markets and how they move and how they act and what's going on, the more effective that strategy will be for you because you'll know when to apply it, right? So just keep that in mind, but it's a great place to start, especially if you kind of struggle with, okay, well, how do I know entries and exits and stuff like that? So jump on that, guys. It's right there below the video. You can get that, okay? Let's see here. BB's channel, what's up? Says, man is preaching facts. I'm trying. You guys get enough of nonsense online, especially if you're in social media. And so my goal has always been, those of you that have been following me, I know some of you guys have been here for all 5 years, but those of you that follow me, that's always what it's about. It's about giving you the realities of trading, giving you the realities of life, really, rather than just telling you what you want to hear. Because, telling you what you want to hear is going to make you follow me or make you buy something. I don't. That's secondary. Okay. If you're here, I think, I take it seriously that you're here. And so I'm only going to give you the stuff that really matters in the grand scheme of things. Okay. So let me see. Fibble Swanee, what's up, man? He says, I say to accept our ignorance. So that is close to being coachable. Yeah, yeah. Just understand, guys. I sit here, I've been doing this for how long, right? Almost 30 years, right? And I tell you guys daily, all the time, that I'm still trying to learn. I still purchase new courses and new systems and try and see, okay, have they done something different or better? Is there something I can take out of this that's going to make me a better trader? And a lot of times, no. I mean, just because I've been around such a long time, but there's often enough something new in there that I can learn that can help um, either change the way maybe I'm thinking at a certain point about something, or help me refine the way I'm thinking about something. So if I'm still doing that, guys, if I'm still spending money, after almost 30 years, what does that tell you? It should tell you that, hey, maybe this idea that, no, I'm going to fight it all the way, I'm just going to do it on my own, maybe that's not the best way to do it, right? So yeah, just some thoughts on that. Andrew, what's going on, buddy? He says, nice call on CMA, by the way. Oh yeah, we looked at Comerica there in our class there, didn't we? Yeah, that was a good one. We also did really well. I think it was Bamboo got like a 5 or 6R on that. We did a Wyckoff session because we do them on Mondays, guys. And so our guys in tier 3, you get access to that Monday session in Wednesday and Thursday sessions. But Monday is Wyckoff, and we looked at which one was it Monday that I think he got? He got like a 6R on that. Oh my gosh, I can't think of it. It'll hit me in a minute here. But there was another trade that we were looking on there as well that worked out really well. Diego, what's going on, man? Hank, what's up? He says, Hank says Wyckoff for the win. He says, traders ride the waves. They don't make the waves. That's right, guys. You want to be that fish that's just going in. You want to be in the middle of that trend. If you can do that consistently, you're going to be so much further ahead than what you think, rather than trying to get in and out of the charts every 2 minutes or whatever. If you can figure out where it's the trend has changed and it gets going, and you just jump in the middle of that, it's the easiest trade in the world. And then you get out before it's done. That's all you'd rinse and repeat over and over again, right? Who else is here? Suleiman Rana, what's going on, man? Martin, I see you there as well. Let me see here. Let me kind of catch up with you guys here. Bamboo, what's up? That Bamboo's the guy I'm talking about that did that with the trade. This is what'd you say? Chris is not only one of the best mentors for trading techniques, but also a great mental coach who has helped me develop the trader's mindset. Forever grateful. Hey man, I appreciate it. Thank you, sir. Yeah, man. Yeah, Matic. That was what it was. Yep, there he is. That was the trade we were looking at. The other one yesterday, yesterday, Monday, in the Wyckoff session. You got a 5.5R on that trade already today, so within a day later. So yeah, tell you guys, it just is what it is, right? So it all starts, guys. I'm gonna tell you before we jump in here, it all starts in your mindset, okay? The things that you've got going on in your head are where you begin and end in whatever you're doing. So if you're not, if you're very closed-minded, very closed down, very structurally just like this, you're not going to get where you want to go with whatever it is that you're trying to learn. Again, everything I teach you here with trading is applicable to the rest of your life. And I argue time and time again that the way that you view life in general, the way that you treat life in general, the way that you approach life in general is going to be the same way that you're going to approach trading. And so if the way you're approaching life is not very beneficial to you, it's not conducive to making great strides in growth and strength, that's trading, right? You're going to get in trading and you're going to be treating it the same way, the same weak way. And that's going to hinder a lot of what you're looking to do. Most people don't understand this, guys. Trading is mostly mental. All right. It's mostly what's in your head, because that determines whether you're open to learning more, whether you're closed-minded, all those different things affect how well you do or don't do. Okay. Let me see here. Bamboo, man, I appreciate what you're doing, man. I love hearing about the successes, man. I've been bragging on you for a while here. Like I tell people that I don't know that they generally believe it, but man, you sit here and you learn and you learn and you learn, and one day it just hits you, and all of a sudden it all makes sense. It's not like it's just this gradual thing. It's just like all of a sudden one day, for whatever reason, it just clicks, and when it does, all of a sudden you see just a huge change in your trading. And Bamboo here telling you guys the same thing. He just went through that a few weeks back and has been just gangbusters ever since. Not that he's still not making mistakes and still gonna. Not every trade is going to be a winner, but oh my gosh, the success he's had over the last 2 to 3 weeks now and continues to just try. It just is crazy. I'm going to get him to put me together. I want to see how all he's doing overall. What his percentage gain is here, because it's just been amazing. But anyway, let's go ahead and jump into this, guys. We'll pull up Bitcoin here first. And by the way, real quick here, we do have, again, next month, we're going to have the Fed meeting to see about rates. There's the market's pricing in a 73% chance that we stay flat. And then a 27% chance that we get a 25% basis point rate hike. Now, I bring that up because right now we've got the debt ceiling thing going on, right? And so the thing about the debt ceiling that I think most people are missing is, first of all, again, I don't think we're going to default on it. I think we're going to come to a 11th hour kind of agreement. But the thing is, when that happens, the Treasury is going to jump out there to fill up their account again, right? And so I think it's Goldman Sachs is looking at something like 600 to 700 billion in Treasuries. They'll probably be selling over like 6 to 8 weeks after the agreement comes through. And you go, okay, so what? That's good, right? Well, the thing with that, understand what Treasuries are doing. When you sell Treasuries, you're taking cash off the market, right? That's what they're doing. They're taking that cash from you and putting it in their accounts so they can build that Treasury account back up. And you're holding the pristine, Treasuries, right? And so pristine collateral Treasuries, right? And so what happens then is that you're going to see liquidity in the markets in general probably drying up. And so we have this thing going on, right? So we've got this debt talks thing, right? So they come to agreement probably, I would expect it maybe sometime this week, right? And then we've got in the US here, we've got the Memorial Day holiday. So the Memorial Day holidays works like this. You've got the holiday weekend, Saturday, Sunday, and Monday of next week, right? But here's the reality. Most traders are gone already at least half a day on Friday, if not, taking Friday off as well. So you're looking at a drop in liquidity there. So now you've got a drop in liquidity there. You've got leading into maybe an agreement here and starting of the sales of Treasuries, pulling more money out of the markets, out of the economy. And so you get, this big kind of this liquidity thing. So again, when we think about the things we've been thinking about, and people go, oh my God, less liquidity, so that means we have to drop. I don't know that we necessarily have to drop. Again, if you've been, accumulating for months and months and months, and if you're the S&P, if you've been accumulating, say S&P, right? And there you are just now breaking out the other day. Why are you going to dump on the market all of a sudden? Doesn't make a whole lot of sense, right? So again, it would seem like maybe retail would get scared because of the way they think, and they would sell most likely, which would cause overall price to rally. Now, that doesn't mean you're going to get pullbacks and whatnot, but just instead of this huge crash back down to the lows, which everybody seems to be waiting for in everything, which hasn't materialized yet, by the way. There's the other more realistic side of it, I think, when we look at it. On top of that, we'll look at the VIX here in a minute. And the VIX, again, is sitting there about 17 and some change. Historically, when you're getting below 16, it's a bullish market. And so we're sitting right above that. And we'll talk a little bit more about that as I pull up the chart here as well, okay? Let me see here. Let me see. Okay, so let's look real quick here at, this is the Bitcoin futures chart right here, right? And so we got fine. So we had this consolidation going on here, right? We had this consolidation going on since last week, okay? Last week, Thursday here. And we're consolidating higher, lower highs, higher lows up to this point. And then we got the breakout. You got some volume on it. We got some large candle spreads. broke out of the descending resistance right here, which is right around this large descending channel EQ. And then we had this other channel right here, which we broke out there. And we've come back and we've retested that support. Now, right now, this is just 3 waves. So we're looking for a breakout above this middle wave. Again, this is the futures here on the CME, but this swing high is 27,440. So whatever exchange you're looking on, you're looking for the drop and then the rally and then the drop. And so that rally high, that swing high is what you want to get breakout above. If you do that, that locks this in as 3 waves down, which is corrective, which suggests then we should be heading up higher. And so, of course, generally we're looking for the large channel resistance, which will probably get you up there around 28,800, 28,900 kind of area, depending on how long it takes to get up there. If we get an impulsive breakout above that, then that should really kind of set us up to be going higher on there, right? And so, yeah, when you're looking at this, I mean, it is what it is, right? It is the way it is here. Now, for what it's worth here, I've got this as an ABC just because, we default to ABCs, but quite possibly could be ABC as W. And then let's see here. And then A, B, C. No, that's not going to work. Let me see here. A, B, C here gives you B. 1, 2, 3, 4, 5. So maybe this is 1, 2, 3, 4, 5. That's what I'm looking for here. Yeah. So looking at something like this, like a 1, 2, 3, 4, 5 for A. And then we get this kind of A, B, C for B. And then we have the ending diagonal here. 1, 2, 3, 4, 5 here for C, right? And so that's kind of the way I'm looking at this. So what we need to see then is if we break out impulsively above this descending channel resistance, again, that 28, what did I say there? 28.8 to 28.9 kind of area, depending on how long it takes to get up there. Then we want to get above wave B up here, which would be right around 30,130. Want to break out above that, and that should then confirm the likelihood that we're going to break out higher and do all those things that everybody wants to argue about and say that we are not doing, right? Where everybody wants to be very bearish on all that. So that's what I'm still kind of looking at here, okay? What's going on, Deadly, Data, Mark? See you guys there. Alex, what's going on, man? He says, Elliott Wave seems really confusing to me. Yeah, it can be at first. Here's the deal, though. It's really not once you get to learn it, if you learn it properly, right? The great thing about Elliott Wave is that it gives you rules, right? And those rules identify the way in which human behavior usually works. That's why it's consistently correct, right? Now, does that mean you will always read it correctly? No. We're human beings. We're still subject to bias and emotions and stuff like that. So we're still going to make mistakes along the way, which is why risk management still remains the most important thing you'll ever do as a trader, right? Remember, rule number 1 is to protect your capital. Rule number 2 is to grow it, okay? Most traders come in, new traders come in, they're like, protect capital. What the hell are you talking about, man? I only got $50. I only got $100. YOLO, man. But again, that's exactly why you're going to lose it, right? It's all about trying to increase the capital and not really know what you're doing and just balls to the wall, whatever you feel like doing. And then, of course, you get the bad end of that. But if you always seek to protect your capital first, that's going to help you grow your capital, right? Now, you can't be so scared to get in, though, that you never take a trade, right? Scared money makes no money. You have to actually get in. If you're in the market, you're a speculator. Speculator, again, as I continue to tell you guys, the definition of speculation is that there is no guarantee. There is risk, right? So the idea is you lower the risk as much as possible while still being able to get a better return, right? And at the same time using proper risk management so that way in case you're wrong, it turns out to be very little movement on your account in the wrong way. So you live to play another day, right? That's the idea. But yeah, man, Elliott Wave can seem like it at first, but if you really study it and you get in, you learn it, it's just a bunch of rules and guidelines. Rules are things like wave 2 can't break down below where wave 1 starts. Wave 4 can't break down below where wave 2 ends. you're not going to have wave 4 is not going to overlap into wave 1 unless it's a leading or ending diagonal, right? Ending diagonals are ABCs. Wave 1 is not 5 waves, it's 3 waves, right? Wave 3 is 3 waves, wave 5 is 3. But these are rules, okay? And then you have guidelines. Guidelines are things like, well, wave 3, generally, your first target for wave 3 is the 1.618 extension of wave 1. Wave 4 generally pulls back 38.2 or 50%. Wave 5 is often the one from the height of wave 4 is 1.618 times the height of wave 4, right? So, I mean, you got guidelines, you got rules. And the hardest part about Elliott wave is memorizing that to begin with, and then just getting used to applying it. It can be very confusing at first, trying to understand what waves are, but really that's just a study in swing highs and swing lows, okay? And the longer you do Elliott wave, the more used to the appearance you get, right? Elliott wave has a certain look. Most importantly, with Elliott wave, more than anything else, is the look, right? That's what you're trying to get. But that comes with time. But the great thing about Elliott wave is that it allows you to actually put visually the way in which humans move, right? The way in which they think, the way in which they act and react. Because humans generally, this is your average, right? And if you deviate, you as long as there isn't anything else going on chemically and balancing in your brain, right? If you're whatever a normal human being is these days. But when you get really excited, you deviate to the upside, right? Birthday party, you won the lottery, you got a promotion, you asked your partner to marry you and they said yes, hey, instant high, right? But you come back down to your average, right? Something bad happens, death in the family, lose your job. You ask your partner to marry and they say no. The way in your brain, the way it goes from average down to low, right? But then it comes back up. And so all of this can be shown through Elliott wave. Elliott wave, when you look at the charts, all the charts are a visual representation of this movement between fear and greed in the aggregate. That's all it is. It gives you a visualization of what's going on in the social mood, basically. Okay. And so, yeah, again, Elliott wave, it's like anything else. Nothing worth doing is going to be done overnight. It all takes practice. It takes effort. It takes work. But if you are focused, if you have discipline and you show consistency in doing the things that you need to do, the correct things regularly, you're going to get where you want to go. Okay? So hopefully that helps there. Is there any use for looking at historical pivot areas, or do you only focus on current time frame? Yeah, no. Previous pivot areas are also good to look at, right? Me personally, I understand where to look at them because I've been doing this for so long, right? So they align with previous price action. For those of you that are with me in tier 3, and I you go through the trainings with me, I often talk about looking left to find these areas of target areas and support areas and stuff like that. And it's the same thing with pivots. I just don't like to keep them because I have other stuff on the chart. I don't like to keep them on there because then it looks all cluttered up with all the pivots on there. But yeah, significant pivots in the past will still hold significance in the future. Now they'll hold varying degrees of significance. The most important pivots are always your most recent ones because that's your most recent price action, right? But yeah, you can look at further back pivots and see potential areas of support or resistance along the way. Yeah. Let me see here. So yes, this is kind of what I'm looking at with what we got going on here. I want to see some further rally here. Again, the idea is I'm looking for this breakout through here to continue higher up toward the 28.8, 28.9 area. And then I want to see another kind of impulsive breakout above this area. Now, usually what happens in channels like this, right? If this is going to be bullish off this low here, most of the time what happens is you'll get a rally up to resistance, you'll get a pullback, and then you'll push out, okay? Now, every once in a while, you'll just push out pretty much directly, but that is the exception more than the rule. The rule is generally you'll rally up to that resistance, you'll pull back, and then you'll break out. And if you're doing Elliott wave, this breakout is usually wave 3 of 3. So again, knowing Elliott wave, you kind of understand where you are in the count most of the time when you're doing that. So that initially, that's always my thought. I always look for it to rally up to the channel resistance, pull back, and then break out. So again, no reason to change that right here, right now either. Okay. Yeah. Is this Ulrich? Yeah, man. I hope I didn't screw up your name there. It says the weekly pivot is shown to be quite the level with 0 daily closes below it so far. Exactly. And online, you guys will often see me referring to it. People are like, oh, this, and that. And, I've been referring to it ever since before we got to it, right? I said that was our target. I said if we break out impulsively, we'll usually come back, retest it as support, and then we'll break up. And we've been for 2 months now using it as support, right? And not just kind of sitting on it. We've built this range right above it. And yeah, so I mean, there's nothing, that's a great thing, right? Let me see. I haven't looked at it here on the futures. Let me see here. Where are we on the futures? Let's kind of close all this off. Yeah, so there we go, right? So we're sitting here continuing to find support right here on the pivot, right? We had this big volume, see this big spike of volume, this large candle spread breakout above it. We've retested it, still here. On your spot, you don't even have a close below it. It stays, it all closes above it. You have a slight close here a few weeks back. And by the way, on spot, your weekly Stochh RSI is almost reset into oversold as well. But, in terms of, let me kind of put this on log here. So better here. For those of you that don't know, this is what you want to see, right? So your range, is this, right? And what you look for is what we call our jump across the creek, which is just the breakout above the resistance, above the supply. That's this big candle spread, large volume right here. And then a lot of times you're going to get the pullback, which is called your back up to the edge of the creek, which just basically means your pullback to test resistance as support. And so we've been sitting here since March, right? Almost 2 months now, right? Actually, for 2 months. Geez, we're already the 23rd. I was thinking we were a week prior. So we've been 2 months going sideways here, holding above the range. This is what you look for on the back up the edge of the creek. You're looking for this range that holds above resistance here, right? Now, again, I'm not a big fan of head and shoulders patterns and whatnot. But, again, if you're looking at it, quite likely have that right here, right? So you've got your left shoulder, you got your right shoulder, you got your head, you got your right shoulder here. And so you pull back and you're just basically testing this neckline area as support. And so based on this, right, on the futures here, based on this head and shoulders pattern here, especially if you're getting a breakout here heading up, I mean, you're looking at a pattern target on the futures here. Up there right around, what is that? 43, 44, right about that area. And so pattern targets aren't the end all be all. They're usually around the wave 3. And so you'll notice right here, that's actually my wave 3 is just above it there at 44,685 here on the futures, right? And that's, that's usually what we get from that. We usually get kind of like a third wave move up into that area. So Ulrich is good from South Africa. Hey, glad to have you checking in from South Africa, man. Thanks to me, you understand pivots now? Yeah, did you get in on the pivots course? That's awesome. Yeah. Nicholas, what's going on? He says, what's your opinion about the possible new all-time high in 2023? Seeing this more and more on crypto Twitter these days. So here's the thing. I don't do predictions, right? I tend to look at forecasting, and there is a difference between predicting and forecasting, right? What I tend to do is I tend to default to the least common denominator, okay? So what that means is, can we get to a new all-time high in 2023? Sure. I mean, I can't say we're not going to. I can't say we're definitely not going to, right? But I would default to the idea that we follow the same general pattern that we usually do, which is a rally up 61.8%, which would get us around 50,000 or so, 55,000, somewhere in there. And then a pullback, And then after the halving, we go to a new all-time high. Now, what that does is, one, it still gives you a path higher, right? So you're at least minimally getting this path higher. And if it does happen to go new to all-time high, you're already in that long to go higher, right? But if it doesn't, you've got a sensible target to get out and do what it normally does, right? If, however, you just take the idea that, okay, we're going to a new all-time high in 2023, and it doesn't actually get there, you're going to be convinced to continue holding on to that while it's pulling back from, say, let's say it gets to 52 and it pulls back to 30. You're going to be sitting there holding your bag the entire way because you're so focused on the idea that it's supposed to get to a new all-time high in 2023. So yeah, that's generally the way that I approach trading. Again, I can't guarantee that a thing is or isn't going to happen. You can't do it as a trader, guy. Anything can happen at any time, right? When you start trying to guarantee it, if you get it right, it's lucky. It's lucky, guys. Even, again, even when you're doing this for many, many years, right? It's still, you're lucky if you get it right. Which again goes back to what I continue talking about, which is that risk management is the most important thing. But what you see on crypto Twitter, a lot of social media, are young guys coming in or young girls coming in trying to get it right all the time because they think they have to. They think they're going to. They think they can. Wrong, wrong, wrong. Okay? I'm here to tell you. I'm an old man. I'm here to tell you guys, if you want to be serious and successful as a trader, get the nonsense out of your head. And that's also why, as new traders, you tend to follow them because you want that guarantee. You want that feeling of security, right? But it doesn't, it's false. It doesn't really exist. And most of them don't understand that. But even those that do will still continue to do it because they know you're going to continue to follow them. And the louder they get and the more confident they get about their guarantee, the more you're likely to follow them. Even when they get it wrong, you're going to still follow them. Influencing is legit, guys. You make a crap ton of money. But if you go out there and you're honest with people and you step up like I am, you don't get to influence people as much. Because people don't want to hear that. They want to hear what they want to hear, not the truth. And it's not just in trading, it's in every other place in life, guys, okay? Nicholas, you're very welcome. Another question, what's your general outlook on the DXY in the next few months? Again, overall, I'm looking for it to continue lower, at least down to 93 right now. 93, 94, which gets you to that weekly S1 pivot. While we're below the weekly pivot, or there's actually a bump there, we'll look at here in a minute. While we're below that, my outlook is overall lower. And I think that's the best way to look at it now. Now, I think locally we might have hit, we might be ready to turn around or near so and continue lower. But again, we're going to pull up that chart here in a minute and we'll talk about it a little bit more. Okay. What's my thought on Bob Lucas and his cycle view that shows us going lower first? He has normally spot on with the cycles. Love Bob's stuff, man. Bob is amazing with cycles. Really love his stuff. But he will be the first one to tell you that, again, there's no guarantees in trading, right? And, he often talks about, cycles that are left or right. Gosh, I can't think of the word. Ring just left me. But anyway, where they're kind of playing out a bit differently. Cycles can come in shorter, and so when you're looking at cycles, it's really a generality, and then you kind of work on it as it's going through there, right? But yeah, it's possible we could pull back, but again, I don't think it's any kind of significant pullback if we do. Again, I think the lows are in. And how they are there. Translated, yes, thank you. That's the word. Right and left translated cycles. And so, again, when you're doing cycles, whether it's, the 4-year cycle that he does, whether you're using like Hurst cycles, anything where you're doing cycles, Elliott wave is a cycle theory, right? If you look at K waves, contradive waves, that's another cycle theory, right? There's so many of these out there. And so, they're generalities. They're like, listen, generally this is what we do. But what happens in the local, the more shorter term can change that cycle a bit. So you always have to come with that open mindset that it could change up a bit going on there. For sure. Yeah. Let me see here. I'm going to catch up with you guys here. Hopefully this stuff is helpful, guys. I'm glad you guys are asking questions. I don't normally hang out with too many of the, people there on Twitter, but there are a few that I know and I respect, and Bob's definitely one of them, for sure. Errol Quinn, what's up, man? I saw you ask Koosh, I'm not sure who that is, the other day on Twitter about how he got his wave 3 count on his Bitcoin. Oh, okay. I know who you're talking about. I don't know who he is, but yeah, I remember that comment. On his Bitcoin chart leading to 140K later this year. I'm curious if he ever responded to your question. No, he didn't. I think he copies the likes of David Hunter and pieces in his own TA there and there. Honestly, I don't know who David Hunter is. But yeah, no, I did ask him, and I didn't ever get a response, which is fine. But you guys have to be careful when you're looking at people who are doing Elliott wave on there. And see, again, this is the problem where when you're new to something, just anywhere else in life, you don't know what you don't know. And I think so many people fight that. They fight this idea that they don't know what they don't know. And they assume that they know and they need to know and they're going to know. And they don't. And so if you're out there trying to follow somebody who says, oh yeah, Elliott wave, and it looks good, right? It looks like, oh man, yeah, that looks good. But then you delve into it and you go, well, I don't know. That doesn't look so right there. But as somebody who's coming in who maybe doesn't know Elliott wave, you can be really thrown off by that, unfortunately. Which is why I spend a lot of time. You can ask anybody that's in tier 3. I spend a lot of time explaining. I spend a lot of time fleshing things out so that people get an idea of my thought process. Not just simple, here's a target, there's a target, but so they can understand why I'm looking at this area and what it means potentially to me, and then what I need to see it do. And then if it does this other thing, what it potentially means as well. I'm always trying to figure out what the couple of scenarios are going on. And then when you do that, you figure, okay, well, if it gets past this certain validation level, then I'm more likely right than wrong. If it gets down to the invalidation level, then that's telling me that my idea is wrong and to get out and to try again. But nowhere in this, doing this all this time, am I ever going to tell you I definitely know what's going on at all times. I can say, listen, I've been doing it this long. I've been doing this certain thing for this long. And generally, this is the expectation when this happens. That's how I learned to read pivots the way I do. I did nothing but trade pivots for almost 3 years. Didn't trade anything else, just pivots. And so you get a feel for how price kind of moves with pivots and what these certain things generally mean, which is a lot of stuff that I tried to distill in the Pivots Points Master Course that we offered not too long ago. And so, unfortunately, it's tough, man. Again, I tell you guys, when I got into trading, there was no everybody had internet thing. AOL had not come out with its unlimited plan, its dial-up. Oh man, I'm old. But anyway, and so the information, the training that I got were through books or through like legit newsletters I got in the mail. If you guys don't know what it is, most places have a mailbox. It's where you get this physical mail, mostly junk mail these days and bills, but it is what it is. But you guys come in today and man, oh man, it's crazy. You guys got all this free information at your fingertips, right? But the problem is a lot of that information are half-truths and outright lies. I mean, a lot of it, guys. I get so many people saying, oh, well, this says this. And I'll go look at it and be like, well, yeah, but that's wrong there and that's wrong there. But if you're new, you don't know. This is why I tell you guys, the time and money you can save by being with somebody, by getting in with somebody who actually knows what they're talking about is just, you cannot calculate the return on that. It's just so huge. But even with that, you still have to kind of go in there and try to do some research and try to find out, is this person really know what they're talking about? Are they kind of putting it out there constantly, right? You guys see me, I do this a couple of times a week. It used to be 5 times, twice a day, 5 days a week. And it's all on here, right? It's all, so you guys can look back over it. I post on Twitter. I used to say I don't ever delete my tweets. I deleted a tweet this morning because it came off kind of rude to reply guys, anonymous reply guys. And even though they probably deserve it, again, I try to be kind first and foremost, even if they're kind of being jerks, which is why I use the block button so liberally. I mean, if you come into my Twitter timeline and you're just right off just an ass, I'm going to block you, not even give you a chance usually to say anything. And that's just the way it is because, I value who I am. I value my time, and that's not worth it. You obviously have you're raised in a barn, right? And then that's what we kind of do. But when it comes to charts and information, things I'm saying, you guys will find out I don't delete it. It's all there. And it's in the hopes that clarity. I've never used a fake name, a fake picture. Business address is always there. It's always been this thing that transparency builds trust. I'm just a firm believer in that. And so that's what I do. But it's hard, guys. It's hard. I understand, man. If you're just starting out, it's hard to figure out where do I start? What do I do? And that's why I spend so much time here talking about trading and life and being successful and the things that you have to do and how you have to go about it. So that way it gives you somewhere to start, at the very least. Whether you go on to somebody else or not, it is what it is. I can't convince you to join TWC. I can't convince you. If your mind is made up not to, you're not going to do it. I'm not going to waste my time. But I'm going to try and give you whatever information I can here to help make your journey a bit more manageable, maybe not quite as difficult. So, yeah. Let me see here. I'll catch up with you guys here. Bamboo says there's a ton of so-called trading coaches on crypto Twitter who give you setups, but don't care if they work out. All they care about is that you use the reference link, and that's the money they make. Yeah. And it's a huge money, guys. I never realized how much money that was. I didn't realize, but it's stupid. Some of these guys out there, from what I understand, with like just like my following, I've got like 31,000 people that follow me, right? These guys that are just throw out the ref links there. That's all they're doing is farming that. They can make upwards of 6 figures a year. It's stupid. It's so crazy. So imagine if you've got 100,000 or 200,000. So think about that when you follow a lot of these larger accounts. I'm not saying don't follow them, but I want you to go in clear-headed when you go in and just make sure that you're really paying attention. A lot of them are just ref farming, guys, because it's just so lucrative. But some of them are decent people. Some give you good stuff. Cheds, I like Cheds, man. He does good stuff. Adrian with Burb's Nest, he does good stuff. I know some people have had bad experiences along the way. It is what it is. My experience has been good. All I can give you is my experience. I can't validate your bad experience if you've had one. Who knows what was happening at the time? Everybody has bad days, bad weeks, bad months even, right? Life is stressful sometimes. So I can do that, right? But, so there are people on there that are, worth following that give you good information, right? Just got to be aware of it. Let me see here. Let's see here. Let me kind of catch up. Let me see. So that gets us Bitcoin there. Let's kind of jump over here real quick, guys. Let's look at the VIX real quick because I promise you we talk about that. VIX is moving up a little bit today. It was about 17 and a half a little bit earlier. We're up to almost 18 and 18.3 as you can see there. But generally, this green band here, right around 30 at the mid-range there, usually this kind of holds in the VIX itself, right? Occasionally, it pops out with a spike out above it, right? But most of the time, you're good there. The 16 is that level. Again, when you're below 16, usually what you see, as you can see here, right? You usually see there's an uptrend, right? So there's uptrend here, and then it spikes up above the 16, gets up in that green zone, it drops, right? Drops, and then drops back down here below 16, and it continues to rally, right? And so generally, that's what we're looking for. Now, we've had, as you can see here, as we got toward, we were here below 16 more or less. We kind of popped out above it, kept dropping below it as we were kind of doing this up and down thing here. And then, of course, we've been above it as we've been moving down. And then we dipped just below it, and now we're moving back up here again as we kind of hit this resistance, right? And this is the E-minis, right? So this is this chart right here. And so what we've been looking at here is the idea that maybe we have this barrier triangle going. And so, do we get follow through on this now? Right? Do we get follow through on this kind of, I've got it right here at the top, but realistically, it's kind of See where this high volume node is? It's kind of this idea right here. This is really kind of your resistance here. Let me kind of pull that down a little bit more. You see this right here? You see if you look across, you see how all this activity happens over here in June of last year. And then again, overlapping here in July, was this August of last year? And then again here in August of last year. And then we wicked up here in September. And then again here in December. Again, sideways action right here in February. Sideways action again, more or less. I mean, you did your deviations here, right? But really sideways since April, right? So this really is that level. Really, as long as you're holding this level, you should be looking for higher up. Now, ultimately, what we're looking for, this is the big level here across, the various markets, right? For Bitcoin, that was that 25,200 kind of level or 500 level, right around there. It's your mid-August swing high from last year. Now, the Dow crossed above this back in like January or February. And we've been waiting to see, will the S&P and the NASDAQ also do the same? And they're both getting pretty close to it now. But man, oh man, yeah. So we've got this area here, and we want to see, really does this kind of yellow area hold? Because if it does, we should be breaking out above that mid-August swing high, which really opens up the door to higher movement in that. So again, you're seeing that today that you've got this drop down here. This is the daily candle, right? And let me kind of zoom in here a bit. Maybe you can't see it so well, but you've got this large black candle here. Well, I say large, but this black candle right here, right? And so when you look at that, and of course, then you look here on the VIX, you notice that the VIX is rallying, right? And so that's kind of the way you look at it. As volatility kicks up, most often that's an indicator that price is dropping. Or in this case, the index, right? Oh, excuse me. Oh, okay. I will give Fibbo his credit. Yeah, Fibbo as well. I thought people just assume Fibbo, man. You're with me, man. You're under TWC. Yeah, you're one of those guys. If you guys aren't following Fibbo Swanee, go follow him, man, on Twitter. But yeah, again, Fibbo does great stuff as well. He's been around doing it professionally for 20 years almost now, I guess. He's developed his own system of looking at the charts, whatever, that work out really well, and almost all the time come out with just about the exact same levels that I come out with mine. So yeah, I trust him significantly. So yeah, follow his account too. He's a trip. By the way, he likes disc golf too, and the Orioles. I don't know about that last part, whatever's going on there, but it is what it is, right? So anyway, yeah. So, as we continue to look here, realistically, let me kind of just move the S&P E-minis here, right? Really, what are you looking for? You're looking for this breakout right here, right? Really, that's what you're looking for. We're up in there. We're pushing up higher highs, higher lows up into this, right? So you kind of look for that to pop up and give you some movement up there. And then that kind of suggests, okay, it looks like we've got an ABC down. Now, again, what that means is that could be done and we could be on our way to new all-time highs. It means this could be a flat. So ABC down and then ABC up and then 5 more waves back down and then up. Or it could be a triangle, right? So ABC and get ABC, here, and then ABC, ABC, ABC. So you go A, B, C, D, E, and then pop up, right? So, there's ways that this could think. I don't think people realize that. There are ways. If this is a wave 4, which is what I think it is, kind of like what we're looking at with Bitcoin, the S&P can go sideways for the rest of the year. Build a triangle. Build a very long, drawn-out, flat correction or something. And what's going to kill markets? Markets hate uncertainty, right? That's where you get that kind of just that pain, right? Price doesn't do what you think it's going to do. Everybody thinks it needs to go down. I shared an article the other day about how hedge funds are finally starting to buy in to the stocks. They're like, listen, we've been sitting here waiting for it to go lower. It's not materializing. It's not happening. It just continues to go up. And so over the last 2 weeks, they've bought a huge number of stocks and stuff. because I mean, like at a significant level, something much larger than what they've done anytime for a while now, because they're all trying to jump in finally, going, well, we're finally going to get in. we haven't gotten in for what is this low over here? This was October. They're not in since October, sitting on the sidelines, cash, right? Waiting for the breakdown that never showed up. Which I guess is a lot better to say than what people in crypto are doing, right? Still waiting for those lower lows. Philo says, I have a crazy target for VIX 1289. So he's looking right down. I mean, yeah, that's if what I'm thinking is correct here, yeah, I expect that to drop back down below 16 and kind of run this range here, right about 12 and a half to 16 there is what I'm expecting. Kind of like what we saw here on this move up from this December 18 low up to this February 20 high. You see how we basically stay there. I mean, kind of popped out a little bit as we did some pullbacks along the way, but generally kind of hung out right there in that same area. Again, same thing over here from, let's see, where do we break down? We did it right here about April of 18 up until about September of 18, where you kind of just hung out in the same kind of area here. So yeah, kind of that's what I'm kind of looking at. If what I think is happening is happening. So yeah. Nicholas says, true. Lots of people still waiting for 10 to 12 Bitcoin. Yeah, 10 to 12K on Bitcoin. They are. And I never try really to make fun of people. I try to be matter of fact about it. Like, listen, if you're not really paying attention to what the chart's saying now, and I've been saying this for months, right? Then you're doing it wrong. You're probably much more emotionally attached to your bias, your opinion, than what you want to admit. I'm telling you guys, the hardest thing about being a trader is admitting to yourself what you've been lying to yourself about. That's the toughest thing. It's tougher than any trade, any risk management, anything. Trading is simple. It's not easy. It's simple because really all you're doing is moving through pockets of liquidity. It's not easy because the emotional side of it can be just absolutely gut-wrenching to try and work through because we hold opinions and emotions so strongly, so doggedly. So when I say trading is simple, not easy, what I mean by not easy is you have to fight yourself. And most of us are not prepared to do that. Most of us live our lives in our own little construct in our head. And when different stuff happens that says we're wrong about something, we just kind of put our fingers on it, la, 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 la. And we just ignore it. We pretend it's not being said. We pretend it's not happening. And we just go on and we forget about what we were saying before, eventually. Or heaven forbid, we hold on to it for way too long and just hurt ourselves in the process consistently. You see how what you're doing in life translates to what you do in trading? And then in trading, that's detrimental to your money, detrimental to your account. Let me see here. Let me see, kind of keeping on with you guys here. So that's where we're kind of looking at the VIX there. We've got the DXY. Well, so this right here is actually the dollar futures on the ICE exchange, okay? And I like that because it gives you the volume with it here. Now, we've kind of hit this general kind of area of support resistance here. I've got a line, but that, again, guys, you're looking for ranges, right? And so we did this breakdown here through the ascending support, and now we're coming up and testing it. We just barely kind of peaked out just above where we were. You can see that we have bearish divergence building here on, this is the 4 hour, right? So we've got pretty strong kind of bearish divergence building here so far. Kind of set this up and make sure it just shows up on this time frame. And then you can see that the 4 hour Stochastic RSI is brought out, can't even say it, broken out into overbought here. Let me see. Let me kind of move this down to the next pane so we can see it a little bit better. Oh, why are we not letting me do this? There we go. Sorry, guys. New pain below. There we go. That's what I'm looking at. And so what do we notice? Well, we notice we got this spike of volume at this long-legged doji right here. And so I'm always careful about volume coming in at the tops, right? You can see right here that we had a volume spike into the top. And again, another large volume right there at the top. And then it rolled over and came down. Where we picked up volume at the bottom. So went sideways, we broke back up. But here we are getting up to the top there, and we have this spike of volume. We have a little bit of build of volume and then a spike here on this, on the previous 4-hour candle, not the current one, the previous one here. So, I'm cautious here about further upside. If we get further upside, we'll look there at the R1 pivot right around 103.7. Ultimately, we could see it moving up. I'm going to get up here. Darn, I thought I just did that on that side only. Current interval only. Okay, I must hit all intervals. All right. And so we look at the daily, and you can see that we're overbought on the Stochk RSI. RSI still has some room to run, though. So, on the daily, we could see a potential rally up into this kind of green range here, which is 104.27 to 105.8, 4.5. But what I was really interested in was this spike of volume on this black candle, right? Right off the highs. We have this spike of volume, which is what this is supposed to be doing. But since I moved into this other pane, you can't see it. But yeah, that candle there, right? So that's what I'm kind of watching here. Do we get this rejection right here in this area? And then we want to see a breakdown through this daily kind of support here at 101.5. If we can get that, there's no reason to think we're not going to break down lower and go. So for me, it looks like potentially like a 1-2 and then maybe a 1-2 here. So this would be like a 1, 2, 3 coming down. If we get up here toward this 105.8 kind of area, then it'll look like a 1 with a flat. A, B, C is 2, and then 3 heading down. Or if you prefer A, B, C. No way to know which one it is right there, but ultimately, looking for the rejection here, right? So if we look at the weekly now, let's see here. With the weekly, this is what I was talking about earlier. We're still below that weekly pivot. We haven't closed above it yet. So until we're actually doing that, I'm not even concerned about the idea that maybe this is some sort of bottom we had up higher, right? But really, it's not even just the pivot because you have this breakout and come back. So it's really this breakout, this swing high here at 105.87. As long as we're below that, to me, there's no even reason to even consider some big move up. Now, if we get above that, we could be looking up here maybe at 111. But to me, it's still possibly that this is a 1 and a 2, and we're heading lower. We really need to see some movement in up in this area, some strong movement up in this area, because otherwise, again, you just kind of, if you don't get that, it's like, okay, well, I'm worried that the world's going to end, but nothing's happened. Nothing's actually happened, right? We haven't got to that point where you go, okay, maybe I should be worried, right? So again, the same thing with Bitcoin, right? Everybody's worried. And this is the problem with macro analysis, right? So I always talk about this all the time, macroeconomics. Again, the way that I get into macroeconomics, I understand what macro is. I understand all the, everything's going on. I get into it by backing out from the charts. So most people, they get into their fundamental analysis based on macro, government numbers, stuff like that, employment, all that kind of stuff, right? And they read that, and then they try to predict what's going to happen. Instead, I look at the chart, and the chart says, listen, we're either doing this or this more likely. And then from that, I can build a narrative on the numbers that come out and what to expect. And if you guys are following, I'm pretty spot on. But it's not because I'm anything special. It's because I look at the charts, and I read the charts first, based on my understanding of social mood and how charts lead rather than follow. Most people tend to think charts follow. But charts lead. Charts are telling you what's going on, guys. The news is in the charts. It's already telling you what's going on if you're paying attention, right? Oh, Nicholas, I wasn't trying to say that you were making fun of anybody. No. I was just saying that was me and my thing. Yeah, I didn't mean for you to think that I was saying that about you. Not at all. So, yeah, again, everybody says, oh, double bottom. Well, it's a potential double bottom, folks. It's not even a double bottom until it breaks out above the swing high here at 105.87. Then it potentially becomes a double bottom. Here, it's just a lower low right here. Potential double bottom in process, but not guaranteed, right? Not guaranteed at all. Right here, you could look at it. I don't even know. I find a quick good example here. I don't even right here, right? You can look at this as potentially a double bottom here, and it just rallied up into here and then came back, right? You could do the same thing. You could just rally right into that and pull back. You've got that weekly pivot there. The weekly pivot is important, but also look at what you have here, guys. I don't want to do all that. Let me jump it out. Maybe I don't have that on the monthly. Let me see. Okay, yeah, I don't have that on the monthly. And so the monthly, you go, okay, well, there's a bullish engulfing candle on the monthly. Well, yeah, there was one right here too. What did it do? It peaked out just a little bit and came back down, made a new lower low, right? A bullish engulfing candle or a bearish engulfing candle on its own doesn't mean anything. It means a pause, potential reversal. Look, we had one right here on the downtrend as well, right? So people, they kind of say these things, and then they assume that it means something when it only potentially means something, right? But reality is, this is kind of what we're, again, what we're kind of looking at here, right? So I can do this. I mean, this is it. And we are into that resistance. We're not above. We have dropped down below resistance now. And we created more resistance with these two candles right here, this up and this back down, right? So we're just kind of running right up into that resistance right now. That's all we're doing, especially right here. Resistance, resistance, resistance. That's all we're doing. So if you're not paying attention to these things, you're just blindly saying, oh, double bottom, or oh, bearish engulfing or bullish engulfing candle or something, you're setting yourself up in the long run in trading to lose a lot of money because you're not really, you're just kind of jumping on before if anything's really happened, hoping that it does what you think it is. But you talk with confidence and conviction and without any real, well, if it doesn't, what does that mean? Or I saw this quote one time, guys. I can't remember who said it, top of mind here, but basically the quote is this. It's something along the lines of new traders, they look at everything that can go right with their trade. They concentrate on everything that can go right on their setup. And professional traders tend to focus on what can go wrong. You see the difference there? New traders tend to see a setup and they're trying to find reasons why it's going to be right, why it needs to be right, why it's going to be right, and they ignore why it could be wrong. Professional traders are doing that. And so there's another quote. I'm probably going to screw this one up too. Where it says that new traders tend to focus on their winnings, whereas professionals tend to focus on their losses. Do you see how those two quotes come together? New traders tend to look at the rosy side of things, ignore the bad stuff or potential bad stuff, don't even try to look at it. And they're just trying to focus on making that money. Whereas professional traders are focused on what could go wrong. How could I lose this trade? And because they're focused on their losses. Because they know, as Ned Davis says, that we're in the business of making mistakes. That's what our business is. Those that make smaller mistakes are going to end up well ahead of those that make larger mistakes. Okay? And so, again, a focus on capital preservation versus capital growth, I think is the right way to do it. It's what we do, right, as professionals. But again, new traders often look at the other side of it. They're often doing the other thing. And so if we look at that and we go, well, new traders tend to be out of the market fully within the first 90 days, and we understand that that's the way they tend to look at things, what I just said, then why would you continue to do those same things that are going to continue to get those same kinds of results? Again, guys, trading starts up here. Starts with understanding and recognizing and embracing the truths of trading profitably, rather than what you think it needs to be or what you think needs to happen or what you would prefer even, right? We'd all prefer not to take any losses. We'd all prefer to make money every time, but unfortunately, that's not the way it is, right? So yeah, so there we go. That's what we're kind of looking for on the DXY. A few charts here. We've just about hit my target here. You might remember end of last year, we were looking for the breakout on this resistance here. We had this target up here, minimum expected target right in this lower half of this blue range, this blue supply structure, and we've hit that. If we can continue to break out higher, we'll look closer up here to the R1 pivot, which is right around 360. But either way, the idea is to pull back to the weekly pivot area. And then at that point, look for a reversal somewhere in this area. It may dip just slightly below, but this area is where you want to look for some kind of reversal happening. And then you get that wave 3 up as the next one. So we're doing good there. Pyre, you guys know I've been talking about this a few times, more than a few times. Man, we have a nice impulsive breakout above the daily pivot and the range equilibrium here, EQ. So you've got a spike of volume. You've got a large candle spread at the breakout there. Looks good. We want to see a breakout above wave B here at $4.29. That'll add confidence to the count, and wave 3 has a minimum expected target at $5.60. Also, we have this other target here based on the height of this descending channel and on the breakout here, which gives us a target up here at about $18.92, which also happens to be right around the EQ of this supply structure here. I think it's a weekly. Yeah, see, it's the weekly supply structure. So almost perfectly at the EQ. So I like it overall. If it breaks down below the swing low here, obviously that's going to invalidate it. But right now, a breakout above 429 is the next step. And then we've got that wave 3 target up there, $5.60. Litecoin, I continue to watch. Remember, guys, we got the big range here. Litecoin's been kind of sideways since, December of 2017. Building this big range. Within this range, you can now see that you've got a low, you've got a high, you've got a higher low, you've got a higher high, potentially a higher low, but that won't be until we break out above the last higher high. But locally here, we're kind of hovering around that weekly pivot, right there around the EQ of the range. And then locally, we really kind of have this green box range here. I love, a few weeks back, we have this doji candle, long-legged demand wick doji here. I love that candle. You get a little bit of volume comparatively to the volume previously, a spike of volume there. And you got this nice movement up into the EQ. We want to see some following out. If we can break out through the upside here, we're looking at 129.44 is my local target. That'll get us pretty close to the weekly R1 pivot. But ultimately, I think we break out to a new all-time high. Or I guess that's an all-time high, isn't it? Breaking out above 400 here. I think we'll challenge that, and I think we'll break out eventually. But locally, 129.44 is where I'm looking. Just want to see a breakout of this green range right here. Does that make sense? Let me see here. Hasta la vista, Barbie. What's going on? Pepe? Oh, man, I haven't looked at Pepe in a bit. Let me see here. Let me see. Pepe here. What do we got going on? Daily's not a whole lot of help. 4 hours, what I'm trying to get to. There we go. I mean, we pulled back off the swing high, almost 78.6. It's a bunch of sideways here. Let me do this. Let me see. We got a spike of volume at the low there. Nice candle on that reversal. Volume coming at the top, expected. Comes down. We're potentially printing a higher low, sitting right above right below the pivot. So if I'm looking at this, let me kind of change things here. By the way, notice we're finding support here on this previous range, this previous resistance up here. Came back, tested support. Support again, dropped right through, rallied right back up. Support, support, support. The lows are getting higher here, which is something you want to see. But again, still find that resistance right there at the pivot. Let me get rid of some of this stuff. Let's see, where are we at? There. Kind of get rid of some of this stuff here. All right. So me personally, I want to see an impulsive breakout above the hourly here, and then I want to see some follow through this swing high at 193,000 there, right above, basically above that R1 pivot. If I look here, I mean, I'm going to be dead honest with you. If I look here, this screams to me 1, 2, 3, 4, 5, right? So I mean, if I'm looking at that, that's my first thought. So I think minimally, because if I'm looking from here, this also looks like 5 down. 1, 2, 3, 4, 5. Now, the one outlier here is maybe this. So maybe it's 1, 2, 3, 4, 5. So it gets you an ABC, right? So I'm not overly sure whether it's an ABC or it's 5 down just at the moment. But here's what we'll do. Because again, it's this one right here. It looks like this could be a 1, 2, 3, 4, and then maybe a 5 here. But what we would do is this is it looks so clear like 5 up. And so that pullback off here, saw us pull back there at just about 61.8, golden pocket, right? And so if I look at this down, 1, 2, I mean, yeah, so maybe A, B, 1, 2, 3, 4, 1, 2, 3, 4, 5, right? So it's possible there's an ABC down into that 61.8. This movement right here then would have to be a leading diagonal. This would have to be like a 1, 2, 3, 4, and then we look for a 5, probably up around that R2 pivot, and then pull back and then go up higher. But I think, if this is 5 up and this is 3 down, we should be looking, minimally as an ABC, right? Because if this is 5 waves down and then this is 5 up, 3 back, if 5 more up, that would get us up there around 25.0710. Right there. Can I get that over there? There we go. 0710. By the way, guys, don't forget, tomorrow morning, 8:30 a.m. Central Standard Time, 9:30 a.m. Eastern Standard Time, I'll be co-hosting that trading show with Scott Melker, Wolf of Wall Street. So make sure you guys tune in for that, okay? Last week was pretty great. We had Cheds and we had Burb on there. And so the week before, we had Fibbo. So great stuff going on there. But yeah, if I'm looking at this, minimally, I would think we get up here around that 25.0710. As long as we can kind of break out impulsively above this hourly pivot. But again, if this is an ABC here, then we'll be looking up higher. And so if we continue up through that level, we'll look up here, wave 3 at 31.4924, and then wave 5 up here at 35.4616. And that would make sense. You get, if we do that, that would just be a 1, 2, and then a 1. Well, let me see here. That'd be 1, 2. Yeah. So that'd be 5 up. So you get your 5 up here, your first subwave right around where your previous wave ended. And so you'd look for higher overall. But right now, guys, I'll be honest, it's just a bunch of sideways. Range-wise here, you've got your distribution right here. Comes down into potentially some accumulation. Again, selling climax, automatic rally, secondary test. You got your push up, you come back down. Last point of support potentially here, looking for an impulsive breakout in this area. So large candle spread, large spike of volume, similar to this potentially coming out of here, would tell you, okay, that was accumulation there, looking to head higher. Okay, so that's what I'd look at. Diego, have a great day, man. Ahmed, what's going on, buddy? Good to see you checking in. Let's see here, Clan. What does it says? Greetings. Can you look at ADA USD on the weekly chart? What do you think in the long run? Can it reach $10? So my first thought is, guys. Okay, so I'm going to be honest. That question sounds emotional. Yeah, I'll take a look at it here real quick, and then I've got to go. But just be careful when you're really emotionally attached to something, because it rarely ends. It rarely ends well. Sometimes, many times, it won't make it to the target that you're hoping it makes because you're emotional. Other times, it'll make it there and you're emotional, so you won't get out. So all I'm saying there is just be careful, because the question does sound emotional the way you put it. So yeah, be careful with that. But ADA USDT, I'll just take one of these charts here. Yeah, let's see here. Binance said weekly. I mean, look at the weekly. Like Bitcoin, the weekly Stochh RSI is almost oversold. I mean, again, this looks like 1, 2, 3, 4, 5. Let me see. I mean, this looks like 1, 2, 1, 2, or 1 A, B. We're getting to see as a flat correction here. But can it get to $10? Oh man, see, $10 is way up here. If this is correct and this is a 1 here, well, yeah, that would be. Let me see here. 5, 1, 2, 3, 4, 5. Yeah, I mean, if I look at this, I mean, that looks like 5 up, which really gets interesting then, right? Let me jump out to monthly here real quick. Monthly's just getting going down here on the Stochh RSI. RSI is curled up. Bullish engulfing candle. What I like about where this bullish engulfing candle is it's right off here from that first month. You see that? Pop up and then drop through. Then drop through. So you've got this large candles through, and now we retested as support. Again, just because it's bullish engulfing doesn't mean it has to go up. But when I look at this other stuff and the way we've moved through it there, and now we've actually retested it, it gives me some hope on that. Let me see here. I mean, if I look at this on the monthly, it looks like 1, 2, and then 1, 2, 3, 4, 5, 3, 4, 5. And then maybe ABC is 1. Well, ABC is W, X, A, B, C is Y, maybe here on the monthly. What I do like, again, is this breakout through this resistance here on volume and candle spread. So you got a spike of volume, you got a large candle spread to break through. Of course, we hit this block right here, right? Which is just nothing other than kind of this area right here, right? And so, you're going to get supply in there. And so that's why you're having a tough time at that point. Oh, gosh, dog it. Where's it at? All intervals. There we go. All right. So, yeah, I mean, especially if you clear that, should be good to go up here right beyond the R1 pivot. And again, I think if you're getting above that, you should be heading out. If this is a 1, 2, as it looks like here, let's see here. That gives us a minimum expected wave 3 at $5.22 or so, wave 5 at $6.40. So I would be looking minimally around $6.40 if we can get a breakout above this swing high, right above the pivot here. So that's that $1.24 area, $1.25 area. If we can break out above that, then I'm looking up here at least at $6.40. I know that's not the $10 you're looking for, but that is the minimum expected wave 5 target. I'd say wave 3 and or wave 5 can overextend and it can go higher. But from right now, $10, other than it being a round psychological number, I don't think it really is showing that at the moment. We'd have to see that break out there and get our steps up there and see how the waves, do we get this overextension in wave 3? If we can get overextension in wave 3, that can push that up there potentially to that. So yeah. So anyway, yeah, that's what I'm kind of looking at there. I got to get going, guys. We're already 10 minutes over here. But I appreciate you guys joining as always. There will not be a stream on Friday that is leading into the Memorial Day weekend, and TWC will be closed there Friday through Monday. We'll come back on Tuesday of next week. So you guys just trade safe out there. I'll post things occasionally on Twitter as I've been doing. So if you guys are following me there, I try to get it to other social media, but honestly, guys, I get a little behind on that. I get the most interaction there on Twitter, so that's usually where I'll put it. Don't forget, while you still can, jump with us over there. Elite CDMM is the code to get your first 3 months of Tier 3 access for just $50 a month. And even if you just stick there a month or the 3 months and then you leave, you don't allow it to go to full price the 4th month, that's fine. You'll get so much, if you're willing to put in the work, you'll get so much education and basing in there that when you do step out, you're going to have a much better place to start from, right? When you're looking and you're evaluating, who should I be looking at? Who should I be following? What are they saying? Does it make sense? You'll have a great base to start out with there. Other than that, grab your free indicator strategy, guys. Right below the video, it says get your free strategy, and it's got a link. Jump in there and do that. Have fun with it, guys. I hope it helps you out. But other than that, man, oh man, I hope you guys have an amazing week and an amazing weekend. If you're celebrating Memorial Day weekend, please be safe. If you're working, please be safe. There's crazy people going to be out on the roads. Unfortunately, it is what it is. America, right? I want to see y'all come back here next Tuesday, okay? I hope you guys have an amazing, like I said, amazing week. Trade safe. Don't forget, the only thing you control in the market is how much you lose, okay? That's it, guys. Everything at the end of the day, the only thing you control is how much you lose. And so make sure that risk management is your number one thing there. Follow me on Twitter at TXWestCapital. Like this stream if you would, please. I'd love if you did that. Follow me on YouTube or Twitch at TexasWestCapital.com, as well as Instagram and Facebook there. Always, I'm going to do something with TikTok, but haven't got around to it yet. But you never know. I may. And if you aren't following, you may not get something. So there it is. You guys be great, and I will see y'all later, all right? Take care.